One of the most common tax questions I get every season as a CPA is, should I take the standard deduction or the itemized deduction? But before you can answer that question confidently, you have to understand what is the standard deduction. Welcome back to the channel. I'm Joe, a licensed certified public accountant with over 10 years experience in corporate and public accounting. I have an extensive background in accounting, audits, and taxes, and I'm all about helping you take control of your money by living better. Be sure to subscribe to the YouTube channel and turn on all notifications. And check out the blog site where we post every Monday, Wednesday, and Friday. In this video, I'm going to break down the standard deduction in plain English, what it is, who it's for, how it works, and how to know if it's the right choice for you. The standard deduction is a fixed dollar amount that reduces the amount of income that is subject to federal taxes. Instead of listing out individual expenses like mortgage interest, charitable donations, or medical costs, you can take the standard deduction and automatically reduce your taxable income. Think of it as the IRS saying, if you don't want to track deductions, we'll give you a baseline reduction instead. For many taxpayers, this option is both simpler and more beneficial. The standard deduction exists for two main reasons. The first reason is simplicity. Not everyone wants to track receipts, statements, and documentation all year long. The second reason is fairness. It ensures that every taxpayer gets at least some level of tax relief, even if they don't have a large deductible expenses. For a large portion of taxpayers, the standard deduction results in a lower tax bill with far less effort. All taxpayers qualify for the standard deduction. That includes single filers, married couples filing jointly, head of household, and married individuals filing separately. However, there are exceptions. Certain non-resident aliens, short-year filers, or married couples whose one spouse itemized may face limitations. This is one area where professional guidance can help avoid costly mistakes. The standard deduction reduces your taxable income, not your taxes directly. Let's take a look at an example so you understand what I mean when we say it reduces your taxable income and not your taxes directly. So let's say, for example, you earn $80,000 and you take the $14,000 standard deduction. That means that you're only going to be taxed on $66,000. That's simply $18,000 minus $14,000. That lowers your taxable income and can keep you in a lower tax bracket or reduce the amount of taxes owed across multiple brackets. It's a simple adjustment with a meaningful impact. Each year, you have a choice to make. And those two choices are whether you take the standard deduction or the itemized deduction. But you can't do both. Itemizing typically includes things like mortgage interest, state and local taxes, subject to limits, charitable contributions, and certain medical expenses. If your itemized deductions exceed the standard deduction, itemizing may make sense. If not, then the standard deduction is usually the better and simpler choice. As a CPA, this decision is purely about math and documentation, not guesswork. After recent tax law changes, the standard deduction has increased significantly. Because of that, many taxpayers, including renters, retirees, and homeowners with modest mortgages, benefit more from the standard deduction than from itemizing. It's common for clients to assume itemizing is better, only to find out that the standard deduction saves them more. Even if you take the standard deduction every year, there may be some planning opportunities. For example, bunching charitable contributions into one year, timing medical expenses, coordinating deductions around major life events like buying a home or retiring. These strategies require planning and documentation, and they should always be reviewed with a tax professional. The standard deduction is one of the most widely used and powerful tools in the tax codes. For many taxpayers, it offers a simple, effective way to reduce taxable income without unnecessary complexity. But the right answer, standard deduction or itemizing, depends on your specific financial situation. If you're unsure which plan is best for you, working with the CPA can help you to file accurately and plan proactively and make a more confident decision. If this video helped you out, give it a thumbs up and subscribe for more tax tips from a licensed CPA. And join me next week where we'll talk about are scholarships taxable income?